Hello everyone. This is the pre-market report video for today, 18th March 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Early morning yesterday, before our market opening, Chinese government released two important macro. One, industrial production growth rate for February month, and second, Chinese fixed asset investment, again same for February month. Industrial growth rate, it's straightforward. How much percentage the overall Chinese industrial sector grown over a year ago? Here the data came as near 6%, which is 0.5% more than the analyst expectation and consistent growth with the previous month. So this first macro indicating the demand revival in China. Then the second one, fixed asset investment. This one is unique for China, meaning it measures the change in the total spending on non-rural capital investment such as factory, road, power grid and property. The data came as 4.1%, which is more than near 1% higher compared to January month and also near 1% higher compared to analyst estimation. Thus, this second macro indicates that Chinese government and private sectors in China together started to invest more capital. Hence, both these macro made the Asian market positive as it's indicating the revival in China's demand and capital expenditure. So, though Nifty opened negative of near 22,350, but within 5 minutes of opening, it moved above 22,500 and closed above that level. Sector wise, pharma is the major positive one, increased 1.5%, followed by finance, auto and metal. Here, financial stocks and auto, it's understandable. India's February month inflation came as very low. Now the chance of rate cut is very high since due to expiry last Thursday, it closed negative. So yesterday, it had a short covering. Metal, no need of explanation. China positive, so does the metal, straightforward. But I don't find the reason for pharma stock positivity. In fact, during weekend, it had a negative news. Such as Dr. Reddy's, Sun Pharma and Zydus, all those pharma companies issuing the recalls in US due to the failed specs and labeling issues. As I said, despite that, pharma sector closed 1.5% positive in the Indian market yesterday. Don't know the reason. On the other hand, media, PSU Bank and Realty were the draggers. Overall, only 38% of the listed stocks closed positive. The remaining majority near 60% actually yesterday it closed negative. About institution, in the cash market, FII again turned to usual selling range. They net sold for 4,500 crore rupees, whereas DAI supported the market as they net bought for 6,000 crore rupees. Just for info, so far this March month, FII net sold for 25,700 crore rupees. On the other hand, DAI net bought for 32,500 crore rupees. So DAI extra net buying for 5,500 crore rupees so far this month made the Nifty to trade positive. Then coming to derivative market open interest analysis, last Thursday it's a typical weekly expiry, 30% open interest either unwound or expired. Following that, then yesterday 20% of the open interest newly added. Hence, open interest position is matured now. So in the index option market, yesterday proprietary traders bought significant high call option. So from net 1% bearish position on Thursday, now turned to net 2.6% bullish position. So proprietary traders option position wise, they want the market to go up. In case of FII, they sold a lot of put options. Hence, from 4.2% net bearish position, it reduced to 2.5% net bearish position. On the other hand, retail traders profit booked all their net bullish position and now wants the neutral expiry. In simple, FII reduced the bearishness, proprietary traders turned bullish and both their position expecting the breakout, mostly upside, but their position indicates they will make money even if breakout on the downside. But the takeaway is they want breakout on either side. On the other hand, it's just retail traders net sold both call and put options, so expecting a market range bound. Here, whom will make money, only time will tell. Future index wise, no status change, same open interest position percentage and same stance among the participants. So these are the quick takeaway from yesterday's Indian market. Moving to US, last night before the US market opening, US government released their February month retail sales data. First, they revised the January month data to 1.2% contraction from earlier 0.9%. And for February month, retail sales increased only by 0.2% against expectation of 0.6%. So it's a bad macro data, but less retail sales demand, it's good for consumer inflation. Then the another inflation cooling metric was US petrol price. After more than 2 years, for the first time, US petrol price dropped below $3 per gallon across US. This is at least 40 pence lower compared to a year ago. Just for info, 1 gallon roughly equal to 3.8 liters. So both these cool down of retail sales data and retail petrol price drop made the US market to close positive. Thus, in the end, Dow Jones increased 0.85%, S&P 500 was up by 0.64%, and Nasdaq increased only by 0.31%. Both Tesla and Nvidia dragged down the Nasdaq. In case of VIX, compared to Friday closing, it dropped 6% and moved closer to 20.5. Here, please note, one of the other reasons for US market positive closes due to short covering, since at present, global momentum is still kind of nervous about this upcoming Fed FOMC meeting or otherwise interest rate decision on Wednesday night. Regarding Indian ADR, as it is, only Wipro closed negative, all others closed positive, especially banks. Both the banks increased over 1.5%. Hence, if we calculate the arbitrage with premium, both the banks indicating the positive arbitrage of over 1.5%. On the other hand, IT stocks indicating neutral and Reliance GDR indicating some positive bias. In line with that, today early morning, GIFT Nifty traded around 22,741, equating to the spot indicating 100 to 150 points gap up opening. Then regarding oil, no major change. At the time of this video, Brent crude trading around $71 per barrel and WTI crude traded just below $67.5 per barrel. As a summary, US market closed positive, GIFT Nifty and Indian ADR all indicating the positive trade. However, still this Trump tariff related uncertainty is there, and as we discussed earlier, this coming Wednesday Fed interest rate decision is due. Widely over 95%, most of the traders and analysts expect the Fed to pause the interest rate. No surprise there, but market wants some clarity regarding this tariff impact. Either way, today and tomorrow we can expect that related price influence. It can be short covering or can be profit booking. About the things to look out during our market hours, there is nothing that I'm aware of is scheduled release that can influence our market. Then in the aftermarket hours for US market in the night, their new building permit, their new housing starts for the February month, US industrial production growth and 20-year bond auction are some of the important things we need to keep an eye out today. Coming to technical, as we discussed earlier, Nifty opened 40 points gap down but immediately rebounded to above 22,500 and closed above that level. Thus on the daily chart, Nifty formed a bullish candlestick pattern with a minor upper shadow and also closed above the 5 and 10-day exponential moving average. It mostly remained sideways and tested the midline of the Bollinger Band but haven't crossed yet. So for a further upward journey confirmation, it needs to cross and sustain above. In addition, on the hourly chart, Nifty has given a symmetrical triangle breakout indicating positivity in the short term. Hence, Nifty might move towards 22,670/22,880 in the near term. On the lower end, support is at 22,350, below which it might see some weakness. In case of Bank Nifty, it opened 160 points gap up and outperformed Nifty. Then it closed above 48,350. Thus on the daily chart, Bank Nifty formed a bullish candlestick pattern with an upper shadow indicating some pressure at higher level. In addition, it also closed above 5 and 10-day exponential moving average and there was a breakout of the resistance trend line on Monday, which is positive. Furthermore, Bank Nifty extended its gain with higher low formation for the third consecutive session. Hence, Bank Nifty has to hold above 48,250 zone for a bounce towards 48,500, then 48,750 level. While on the downside, support is at 48,250 and 48,000 zone. As per the weekly options data, the maximum call option openers was at 23,500 strike, followed by 23,000 and 22,800 and 22,700, with the maximum new call option rating at 22,800 strike and then 22,850 and 23,000. On the put side, the maximum openers was at 22,500 strike, followed by 22,000 and 22,300, with maximum new put option rating at 22,500 strike and then 22,300 and 22,200. Thus, from options data, Nifty might trade in the range of 22,300 to 23,000 in the short term. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.